Hey, this is Matt from InvestiQuant. Today is Friday, July 9, 2021. This morning the market's gapped up and we have been off to the races all session long. We've got about 30 points of range here in the S&P and it is trading right up at the highs, taking out all of the recent highs as we now trade at all-time highs here. As we go into the afternoon session, what we're going to be looking at here this afternoon in Discover is we're going to be looking at a cool little pattern here based upon where it opened and where it's trading at relative to recent highs. So let me go ahead and set this up. I'm going to make this a time-based entry that gets long at 3 p.m. Eastern Time and exits at 4:15 p.m. Eastern Time. Now for this study, we're going to use two simple filters and then put it at the end of the week in a bull market. So let me do this. In the opening filters, I'm going to say that we did not open above the highest high of the past 10 sessions. And you'll see why that's important here in just a second. So to do that, I'm going to go into the opening area section and I'm going to scroll down. Well, I don't even have to scroll down. It's right here, this bottom option, where it says open above the highest high of the prior 10 days. So we did not do that today. I'm going to hit a minus sign there. That makes it a not statement. So this will be specifically looking at any day that did not open at a 10-day high. And then I'm going to go into the post-open filters and I'm going to say, as of the time of entry, which I've got set here to 3 p.m., it is trading above a 10-day high. So to do that, intraday close versus daily levels, I'm going to hit equals here next to greater than 10-day high. So this means that throughout the trading session, we have moved to a new 10-day high. We didn't open there, we opened below that, but we are now trading above that. So that's a strength pattern that's taking place here. Next, I'm going to go into the indicator section, put us above a 10 and 200-day simple moving average. And then lastly, I'm going to say that this is specifically happening to end the week on a Friday. So in the calendar section, I'm going to hit equals next to Friday, and that will conclude the study. Now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time and exiting at 4:15 p.m. Eastern Time when you open below the highest high of the past 10 days, but at 3 o'clock, you are trading above the highest high of the past 10 days. And this is taking place specifically on a Friday in a bull market. Historically, we've got 54 samples in the S&P, 55 in the NASDAQ, 58 in the Dow, and 57 in the Russell. And if we look at the win rates on these, you'll see that they are all generally favored. You got the S&P coming in at 59%, the NASDAQ 69%. That's the strongest of the group here. The Dow 62%, and the Russell 58%. So all of those are at least mildly favored, with the NASDAQ being quite strong on its pattern there. If we look at the average win and average loss, the average win on all of these is also favored. So not only are the win rates favored, the average win has historically been bigger than the average loss. Now for the S&P, they're pretty similar in size, but the difference between the win and loss is a little bit larger when you look at the NASDAQ, the Dow, and the Russell. The average wins there are quite a bit larger than the average losses. So historically speaking, this pattern, if you're trading above the highest high of the past 10 days, but you did not open above that level at 3 p.m. Eastern Time on Friday in a bull market, has been fairly bullish. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next week.